Happy Friday, everybody. This is Joe Cusick, Vice President of Wealth and Asset Management at MoneyBlock.com and TradingBlock.com with your traders exclusive for this expiration Friday, the last trading day for the February options cycle. And you see that the market is a little bit challenged. S&P's still rattled right around that 1900 mark. Everyone's asking, what do the bulls need? And really right now what the bulls need is enough buying pressure to clear key resistance. I've mentioned it in the past, but and I'm going to say it again, 1925 is that initial resistance point, which we did get over this week, but we could not get with conviction over that 1950 and stay over. You also are going to still need to see a continued rotation into those aggressive or offensive sectors. Now, yesterday and a couple days prior, we've seen that the oil sectors have been one of those offensive or aggressive sectors that has pulled up. When you look at energy, specifically if you take a look at the XLE, it needs to get through that 58 mark on the ETF that tracks the energies. Right now, it has not been able to get through that resistance level. That was its previous support. As you know, once you break support, that now becomes resistance. Now, it tried to get up there, tried to hit through 58, it's pulled back. This reversal in that energy sector is again giving pause to the bulls, and this is one of the segments that you're going to need for the bulls to continue to have some upside in the major indices like the S&P 500. Also, you want to make sure that you're keeping an eye on the behavior that you've seen when we get up to these December highs. The market continues to struggle when we get up there, and really where you're going to see how much it's struggling is in the volatility markets. Volatility is going to move contra to what the S&Ps are moving. S&Ps go up, vol goes down. S&Ps go down, vol tends to go up. Watch that relationship, because I've been watching the closing levels of the VIX, and the VIX has not been able to break that 20 level, and I don't think it actually is going to. As a matter of fact, today the volatility index is still trading around that 22 level on the VIX, the cash VIX, and you are also seeing that the VIX futures are trading in that 22.5 to 24 level as you look out as far as June and even getting into July. That 16, 17 level on VIX, if in fact the bulls do grab and still challenge the upside and break that 20, that 16 to 17 level, I think is going to be a level where the bears and shorts are going to come in and they're going to challenge this marketplace. I still do believe that the overall trend is to the downside, and I don't think the bulls are going to have much as far as fuel to really shoot to the upside. But watch the volatility index as your barometer. If you see that the 20 level holds, I think that then you're going to see that the bears and the shorts are going to come in, and they are going to start looking at those offensive, aggressive sectors like energy, like tech. They're going to put some pressure in there, and that's going to put the overall market under pressure. All right, folks, that is your traders exclusive for this expiration Friday. This is Joe Cusick, VP of Wealth and Asset Management at MoneyBlock and TradingBlock.com. Wishing you a great weekend, and we'll talk to you next weekend.